Mike, let's talk a little bit about asset-based lending.
There will always be a need for asset-based lending. And why is that? It's because we go places banks won't go. I mean, traditional commercial bank lending can't go, shouldn't go. And so we get into situations where there's a lot of leverage, more leverage than a bank might be comfortable with, either because a company has had losses and they're turning around. The classic use of our product is to finance growth. So we help turn a company's assets into cash faster than their normal trading cycle will allow so that they can grow faster. That's really the classic use of our product. We're seeing a lot of cases right now where people have thought maybe I'll sell my business and then realize they don't know what they'll do with the cash if they get it, but they want to take some chips off the table, so we'll allow a dividend for that.
So what makes MB stand apart from other ABL lenders?
Well, I'd say the first thing is the stability of our group. Our team has been together for probably some of us close to 30 years. My head of credit and I were auditors together at GE in 1978. But the team, we've seen it all. We've been together for decades. And because of that, we can bring a lot of different types of solutions that others may not have thought of. We've seen it all, so we don't get too excited if there's a bump in the road. We pride ourselves on closing what we propose and not giving people any surprises or any dramatic changes at the closing table. And I think that is probably what sets us apart, is that reputation for being reliable. And we also build on our relationships. We have, I think, 60 key partners in all different realms, from private equity to M&A to subordinated debt, other tranches of debt. We rely on them, they rely on us. If you look at the last 50 deals, there's probably another key partner who was involved in it somewhere or the other, who had done business with us in the past and wanted to continue to do business. Well, there are no cookie cutter deals. We look at every single transaction as a unique circumstance, and we try and tailor a solution to that company's needs. If they sell 80% of their product in November, October through December for the holidays, we'll give them a higher advance rate in June and July so we can bring all that inventory in and expect it to clean up in January and February. If they're selling landscaping material to Home Depot, it's a different cycle. You can't give them the same deal, right? You have to give them a deal to where they can borrow more money at the end of the year and into the spring than in the summer, say, for the other people. So we kind of try and tailor a solution to each individual circumstance. You know, I always say that hard and fast rules are what people have to make up for their inexperience. We have a lot of experienced people. Our approach is to take a look at a situation and try and figure out a way to get them what they need, not sit and try and figure out why we shouldn't.